Welcome to my YouTube channel where I study the best investors from around the world. This week, we take a look at why Mohnish Pabrai invested in Alibaba. Mohnish Pabrai, the Indian-born American renowned investor who is the managing partner of Pabrai Funds, recently disclosed in his portfolio that he entered in a position in Alibaba Group Holdings Limited. Mohnish Pabrai, when interviewed about his investment in Alibaba, disclosed it to be an incredible business. This is what he had to say. If you look at my filings, you can see that we have a position in Alibaba, and it's an incredible business. If you look at Alibaba and Tencent and you know where they're at, the ecosystem, the moat, and what they control, and when you look at the tailwinds from China, it's a lot easier for me than even the large US tech because the tailwind is so much stronger and there's some serious barriers for entry. It's also very cheap. I think Baba is one of the cheapest plays out there. Mohnish Pabrai is an Indian-born American value investor who is the founder and managing partner of Pabrai Funds. Pabrai Funds is an international investment fund that has $450 million in assets under management across the globe and within a wide range of industries. He's very well respected in the investing world, holding close relationships with the likes of Berkshire Hathaway's vice chairman and investing legend Charlie Munger, as well as Warren Buffett, whom he paid $650,000 to eat lunch with at a charity fundraiser event. Pabrai operates a highly concentrated value-driven fund, with his top 5 holdings making up 78% of his total portfolio. This approach, although risky, some would say, has paid off considerably well with his return since inception. Rumored to fast outpace the S&P 500 and himself expanding his net worth from only a few million to almost $100 million in the space of 25 years. Very recently, Pabrai opened a new position in Alibaba, and this caught the attention of many, as Mohnish Pabrai is very much an inactive investor and only intends to make big and infrequent bets when he feels the odds are very much in his favor. His position in Alibaba appears to make up around 8% of his total portfolio, and should have a price range of $220 to $240, depending on where he picked up the majority of his shares. He also said in a recent interview that they are still purchasing shares this quarter, suggesting he will be buying the dip and also making it a larger position than it already is. In one of Pabrai's most recent interviews, he gave us some clear indications as to why he bought Alibaba in the first place and what makes it such a compelling investment today. So let's see what he had to say.
It's an incredible business. If you look at Baba and Tencent and kind of where they're at and the ecosystem and the moat and what they control and all of that. Look at the tailwinds from China. There's a lot to me to like even more than the large US tech, just because I think that the tailwinds are so much stronger, and there's some serious barriers to entry. Obviously, going to be much larger revenues and profits and such in the future with all the different things they have going on, but you're starting from a very large base. Mm-hmm. Right, so 600 billion plus market cap. It's very cheap. I think Baba is one of the cheapest plays out there.
He goes on to compare Alibaba with Amazon. He says,
in the long term, I think a lot of the value creation for them is cloud, which is non-existent from earnings perspective today. They have some scale, but they're the number one player.
When you look at Amazon's numbers, and Amazon's numbers with the cloud are somewhat misleading because they dumped their internal cloud expenses in there. So actually, 500 million to 500 billion revenue and 15 million to 15 billion net income is actually understated. So I think they're making more than 15 on that one because they're growing as well. They're also investing in all of the future growth. So the cloud margins are incredible. And the issue with the cloud is that very few people can play. In the US, the game is over for the most part. You've got the players, and it's hard to even see them even changing the position they're in, which suggests that the barrier for entry is extremely high and the competition in the cloud space should be minimal. Here are the reasons why Pabrai bought Alibaba. The tailwinds from China, especially in tech, is more superior to the US. Very high barrier for entry, or wide economic moat. Alibaba is one of the cheapest plays out there, even at $600 billion. There's a huge hidden value in Alibaba Cloud. He was asked if he was concerned about the Chinese government's control over Alibaba.
I think Alibaba is a crown jewel for China, just like Tencent is a crown jewel for them. So I don't think they will want to do things. These are the plays that have the possibility of global footprints. That they can get there. So I don't think the government is going to take an approach which is going to, kill the golden goose, if you will. Mm-hmm. So my take is they've extracted their pound of flesh, and they've sent a pretty clear message who's in charge and such. So I don't really expect much more than what we've seen already.
Of course, no company is without competition. Here are Mohnish Pabrai's thoughts on Alibaba and Tencent versus US big techs. He says, I think large Chinese tech, because of the tailwind, because of the size of the market, because of future GDP growth, all of these other things that are going on, and quite frankly, the modesty of the valuations, it's a great place to be. Although the PE price to earnings ratio basis is around 20, the thing is that the 20 has a lot embedded in it. They have a lot of money losing businesses that are within that 20. So actually, the real multiple is much lower. The thing is, some of these are in the black box. We just don't know a lot of stuff that's inside there, but it's a lot of good stuff inside. So two companies, specifically Alibaba and Tencent, I don't think that they fit the template of typical Chinese businesses. Both of these businesses from a very early days had international backers, and they've got what I would call enlightened leadership. And so if you drill down into the principles of Alibaba, for example, core principles that they live by, they are very transparent. That's a very core corporate mission. I think Jack Ma put a lot of these principles and vision missions into the business, and it's very deeply embedded. For example, when they hire a new engineer, they'll take them offline for 4 weeks and make sure that they get embedded into the company's culture. I think that these businesses have learned that they're really global companies and that they need to operate on the global set of rules. So they have been very good partners for their international investors. Do you think Pabrai secretly owns Tencent through Naspers? He said both are really good businesses, and he thinks Tencent is interesting to look at through a Naspers lens because you can get a discount if you go through them. Mohnish was subsequently asked if he owns Naspers as well. He said,
I cannot comment on things that, not in the public domain. I like Naspers. I think Baba and Tencent are similar, but they're also very different. So there's a company in South Africa, which is now 106 years old. They were like a book and magazine newspaper publishing company. It's a company called Naspers. Some of you may have heard of it. Naspers. So in 2001, Naspers, 20 years ago, invested $32 million into this Chinese company called Tencent. Okay, so they put $32 million into Tencent, and they got a 43% stake in that business. And what is mind-blowing about Naspers and the chairman, the guy who was the CEO, who's now the chairman, is through the 20 years that they owned it, they never sold the stock. And what ended up happening is the $32 million investment. So Tencent has a market cap now of about 700 or 800 billion US dollars, and they they sold a little bit, I think, in the first 4 or 5 years, but basically they held about 1/3 of Tencent. So the Tencent position that they own is like around $200 billion. Okay. So this $32 million investment became $200 billion, became 8,000-fold return for them. And they have done extremely well on their other investments and other things as well. This wasn't just one aberration, but everything else pales in comparison to Tencent. So the company has probably got a value of about $200-300 billion at this point. And throughout this 20-year period, they got tremendous pressure from every corner you can think of to sell off the Tencent position. So Tencent became a $1 billion position, they were told to sell it. $10 billion position, they were told to sell it. $100 billion position. And to their credit, the two guys who were at the top pretty much told everyone to get lost. And even now, I mean, you guys may find this hard to believe, but at 700 billion, Tencent is deeply undervalued. Deeply undervalued, which is why they're not selling, right? So, abhi tak kahani khatam nahi. So, in the case of Nick Sleep, when he bought Amazon, I mean, he bought some stock at $30-40. He bought some stock at $100. He bought some at $200-300. He did not get that much return on Amazon by the time the fund was shut down, or even till today. I mean, even if you look at the most of the Amazon position is up 10 or 20-fold. But in the case of Naspers, what blows my mind, and I studied these two guys at Naspers. I studied कि ये कौन सी हस्तियां हैं जो ऐसे अपना धंधा चला रहे हैं. And what I discovered when I studied these two guys is this was not a fluke. This was not a bunch of gamblers. These guys are extremely good at what they do. And in fact, he understood. So one of the things that Nick Sleep understood is that exactly the Walmart story. So what they understood is they are like a founder of Tencent. And, you know, the Naspers has a very close relationship with Tencent. They sit on their board. They actually co-invest all over the world with them. It's a very good, close relationship they have. So basically, Naspers, which was a South African newspaper company, and the funny thing is they bought that $32 million stake from Li Ka-shing. Okay, so Li Ka-shing is a multi-billionaire in Hong Kong, has done extremely well, really smart guy. He's worth $30 billion. If he had not sold this position, he would be worth $230 billion. Okay, so he probably is looking in the mirror saying, why the hell did I sell this position at all? But anyway, the thing is, it would have been almost impossible for anyone to hold that stock for the 20 years that this company has held the stock. And they're not done yet. I mean, in my opinion, when I look at something like Tencent, Tencent has this bazooka they carry on their shoulder called WeChat. And they can fire that bazooka at will. And I mean, you know, you look at a company like PDD, you know, they just fire the bazooka and PDD's, you know, suddenly sales are through the roof, you know. And so Tencent has a pretty interesting ability to scale up a range of businesses. I mean, their investment portfolio is incredible. Yeah, I mean, there's a lot of stuff there which is going to be huge in the future. We just don't know which ones. That's why I think those are good plays, because that's a great basket.
So I think we can take from that Mohnish Pabrai is very bullish on Alibaba from some clear and obvious reasons. It was also interesting to hear how bullish he is on Chinese tech in general. especially in comparison to the US counterparts in terms of both underlying growth and the consumer behavior in China versus the US. Lastly, we also got our hint as to Mohnish's feelings on Tencent, another compelling company that has a unique DNA and growth opportunities. Do you believe Mohnish owns Tencent through Naspers as a result of his statement? That's exactly what I thought, and it makes me want to dig deeper into Naspers to see how quickly that clear discount to net asset value could close over time. In summary, Mohnish Pabrai is very bullish on Alibaba for the reasons stated above, and also in Chinese tech in general. Alibaba is ahead in terms of its runway for growth and consumer behavior, two major factors that will contribute to long-term value. Mohnish loves Tencent and may own some Naspers stock for Tencent exposure and believes it's a discount. So do you think Mohnish Pabrai is making the right investment in Alibaba? I hope you enjoyed this week's investing principles from Mohnish Pabrai investment in Alibaba. Please like and subscribe to this channel so that I can continue to make videos like this for you to enjoy.